There we go. That one looks right. Silly OBS. Alrighty. We're just getting started. We'll be letting some people pile in here. As always. Morning, everybody. What's up? Can you guys see everything okay? I think so. Looks like it. Where are my notes? You know me and the socials. Alrighty. Yeah, I had to restart it. For some odd reason, it didn't save the name and edit and everything. It just still had last week or 2 week ago's live stream title and description and everything, even though I edited it all, saved it all, changed it all, and then it just said, nah. So quick little reset. Morning, everybody. Audio's good. Cool. Thanks, Terry. Appreciate it. Look within. Awesome, guys. So as always, we'll chill for a few minutes here. We'll start right at 12:30, about 3 minutes. We'll be going over a lot of the intraday keys here in a minute. Want to talk exactly what happened, exactly what we could have did differently. Not that we took any big reds, but man, we could have been prepared from the last break low on the daily with those no tags. And I want to talk a lot about the shine and what we're going to see coming up to the next trade day. So this is going to be an interesting one. I did find some really cool longer term stuff, so pretty stoked about that. If it does get a little bit loud, I told the guys upstairs to be a little quiet or the best they can be. So if you do hear some banging and thuds or whatnot, it's my construction crew friends on some revamps here. All right, we're going to pretty much start fresh. We'll start right from here. Good morning, everybody. Hello, hello. There we go. About a minute. We'll get cooking here. Zelensky said he's ready to step down. It would guarantee peace. Uh-huh. What a clown show. Alrighty, so excuse me, I gotta turn down this just a little bit. Me and my daughter, I think we're getting sicko. All right, 30 seconds, we'll kick this off. Happy Sunday, everybody. All right. So let's get into our last week. What a sell, right? There's a couple different reasons for all the sells that were coming in here and all the opportunities we've seen for the sells coming in. And I want to go over some stuff that we would set up just from the start, right? We got to go right from what we were doing this week on. So we want to focus on that quick start here. And from that weekend, from last week's double no tag GPs, right? So we talked about these two candles and how the trade's set up right from the beginning. We're going to do this first, right? So from the 14th to the 18th there, obviously the extra weekend, you'd start, right? 18th, this is the week. Start of the week, we have these two no tag GPs. So when we do these candles, high-low, like so, and then when we're looking at the week that we traded right here, the over-unders become the top of these two candles from the 12th and the 13th, right? That's the biggest over-under we have to look for continuation. So we're going to delete the bottom one first, because that's obviously right where we ended, right into the golden pocket, which we'll cover that a little bit later because I want to talk intraday first. We're going to start on the daily here, where we were consolidating and creating higher lows and higher highs for the all-time high day, right? And then we had that huge breakdown. And then it got obviously sucked right back up, closed high. And then notice snapped, right? So a lot of the time for extra confirmation, we were drawing on NQ and we were coming in and taking these dojis and these bodies and using them as zones like we like to do. The dojis and bodies are very strong zones. And even with just a simple zone and a little bit of pre-market love, you could see where a lot of those breakdowns were holding support. That snap day closed on a big rebound. And the only reason we rebounded right near the end of the week was because of the GP tag, right? We talked about that. For anything inside this, we're going down to this, right? The break of the 100 results in a chase to the golden pocket, right? And with that being said, we had an opportunity to see that big old push back up as if we were going to do something, awesome. And then she let loose, right? So we had this algo to deal with. Now, what would we have been done differently here on the start is with data, right? So I was waiting for that 9 a.m. we started getting these wicks. This is where that's that data consolidation. And what we did during our intraday stream is we put out this data like this, and we were worrying about the bottom myself. And I made this blue box right here for my crew, and I was like, you guys, if we bust through the bottom of this data right here for the day, it's done. You might as well call it a Black Friday. It's a Black Swan Friday, because if we're gone with that data, it's gone, legitimately gone. And that's what we were joking about right here. And well, as you see, she kind of tumbled pretty good. So coming back into what I would have identified a little bit differently in the grand scheme of things is I'm going to make the over-unders exactly where they need to be on the fibs first. And the last trade day, obviously Thursday before the Friday that caused this big monster here, should always be fibbed out as well. So if we're going to change these just to white quick, and then we always do, and the only reason we're keeping this one on, that's that no tag, right? We got that tag from Thursday. So that becomes a huge over-under right here. And we always mark these in light purple. And then we're going to utilize Thursday's high-low, right? And then we're going to just leave those as normal colors so we can decipher between the golden pockets. Now, notice here, extra weakness. And I want to point out a couple different algo dispositions that we want to talk about here, because we did call that the 10 SMA was just going to ride down, right? It was in a controlled algo sell. It got so weak, it got so shy, and it just was not going to let go of the 10 SMA. We were bitching about that way back here, right? And I said it's going to be an algo sell. And what that is where the price action sticks to the 10 SMA, 9 EMA. They're going to be so close to each other. It doesn't matter which one you use. But the price action, it just hugs it the entire day, and you never get away from it. Extreme weakness on the bounce, right? So the 5-minute here, some big key takeaways. The 100 EMA in the green was never tagged, okay? We had the breakdown of the over-under. Now notice the data was rated over-under, okay? This is our 9 a.m. candle. The over-under, 536.31, huge over-under. Broke through. It even gave us the premium backtest. And I didn't even look at it as a backtest. I was looking at it as the, okay, GP hold to push to lower high or the 100 EMA. Obviously, because we shied it back here, let's get a hold of the GP, right? And then push to something resistance and then start looking for that weakness. But what could I have done and seen differently here with that data is the 1-minute chart, which we were focused on. But one thing I didn't overanalyze here was the 100 EMA and the moving averages no tag. If we look at the opening of the day here and we get real close on the minute chart, notice that pre-market was the last time we were close to that 200 SMA, 100 EMA, even the VWAP, right? And we shot down. And this was our pre-market plan. We were short all for the pre-market in the open here, and we got that downside, which is fine. But the continuation metric, what I missed was because of the shying. And shying is when price action will get very close to something that you have identified as support, resistance, or algorithmic, like a moving average, right? Because they allow tags to them. And you see that 100 EMA up here? And that is my hands down favorite moving average. Notice how even when the wash happened in price action and the 100 EMA was chasing it down, we shied it when it came to support of that white GP, right? So that's the next GP down. This was the next support. Well, first tag, we got the 10 SMA daily mixed with the GP 532.74. Now this is where we were looking long, back to VWAP of the 100, right? And notice when it got close to the 100 EMA, it shied away right here. Okay. It had all the attempt, but this is a really big signal for extreme weakness and continued weakness, no matter what. And this was a very big piece of the pie that I didn't touch on enough on live, where if we start shying those actions, we are going to continue very heavily to the downside. Now, we did talk about the data low break, and it was gonna black swan if it broke the data lows, but that was off at GPs. We could have identified it even cleaner for the continuation, is what I'm saying down here, when it got close to the 100 and then just ran and never returned to the 100 EMA. Now, this is both fine. If you miss, it's not a big deal. The fact that we can come back into the next trade day or the next 2 trade days, and we know for a fact that the 1 minute chart that next day at that 100 EMA has a super high % chance to be a tag, right? Any kind of tag mark. So when it opens, the futures open, then we get regular stocks at midnight through Central Time for me, and that pre-market starts, and wherever it wants to bounce, because we got extremely close on the Qs to the 50. I think we're way closer on SPY. This is the 50 SMA daily. And when we're going to get close to that, we're going to bounce that. And no matter if the price action bounces big in pre-market or if it drops big in pre-market, causing a complete continuation downside, regardless, the 100 EMA is going to be on watch for retraces, right? For first tags. So if that 100 EMA is just looming like this and it comes to the next trade day, and then we have price action under the 100, you're going to look for the price action to pop to the 100. If the price action is over the 100, you're going to look for it to fall to the 100, because that will create a magnet, because the entirety of Friday, the 100 EMA was never tracked. And interestingly enough, on the 1 minute chart, neither was the volume weighted average price, the purple dashed line. So this is the standard VWAP. And of course, for us, we have the -2 deviation away from VWAP and the +2 like everybody. And this regular VWAP in the center was also, again, a no tag. So we didn't get any kind of opportunities to see that resistance tag to retrace. So that will also articulate as a very big precursor for continued selling, because it is very, very shy. And when we get rid of the big guys here and we focus on our intraday stuff, we hit this algo right here, right? So we can take a peek at this, and we were watching this for potential bounces as well in first tags, and we did get it, right? It opened up right into the GP, right? Perfect. And it held a little bit of that GP off yesterday's close, pushed, had a break of, now remember the 50 is the most important, 537.98. Open, broke, hit yesterday's close, retraced to the T, the 50 fib, continue down, shied the VWAP, rode the 10, so on and so forth. And what do we talk about? We talk about channeling with the VWAP as well. So when something like the VWAP is resistance, and then the -2, right, would become support, and it couldn't even get back to the VWAP. But between the channel, it goes VWAP to lower, VWAP to lower. That's the channel. It's stuck under VWAP. Now, this was way more aggressive than a channel, being stuck, but obvious sell point, right? So a couple different just takeaways there that could have been recapped differently, and how we would have traded this start to finish. It could have looked a little different. So let's go to that daily chart real quick and do a full setup start to finish real fast, because for this weekly, this was the biggest precursor that I was not focused on. I was focused on intraday algos and 1 minutes more than my main long terms. And, either one is going to work fine, but to have the effect, you should be working, or have a much stronger conviction, you should be using your long terms more. So what we like to do is we chart off start to finish. We're just going to go through a quick breakdown on how I would have played the week. Let's pretend it's that holiday week, so Tuesday, start of the week here. So the week of 210, obviously. We're going to chart off the last week, and this was last week. This is now 2 weeks ago, right? So we're charting off this week to play last week. So we come into just the intraday, right? Well, let's go daily first. So we're going to go to the daily here, and this is that week, right, of the start. And boom, right here, 18th, we started, okay? And we were teetering on the top of that weekly. So this weekly was one of the biggest level, 538.88, right around 539. And we talked about that level being a huge make or break it. Now, one thing I didn't see, or, maybe it could have been just because the drawing was just a little bit off, or whatever it happened to be, that we got a shy right here. So again, we talked about price action getting close to a price level, right? And then not hitting it. So if you look at that day chart right there, notice how it didn't hit 532.41. That's a weekly Fibonacci, right? So just from the daily chart, when we tagged into that 10 SMA, the 10 SMA support in the blue here on the daily chart stopped the action from coming down to 61.8, but then it caught way back up, right? Hugely. And then when we go to that intraday chart and we've seen the loss of the weekly, I should have swapped my narrative bias to instant short the second we lost that weekly with conviction. So even so, just with the intraday algo that we had in the pre pointed to the downside, we snapped that weekly without even touching it in the live. We didn't even touch this. It opened under 539. And again, like I said on stream, I sold a bunch of calls at 539, but you know, the day trade would have been a lot more, right? So as we came into that weekly break and as we came back down to tag again, I completely, not disregarded, but mismanaged my weekly tags because I had been looking at intraday algos 1 minute and I was just dead set on that upside. So if we take a look at this downside here, I would have been able to zone out my algo to the downside, right? And I knew by looking at the weekly chart, there was actually no tag on the 61.8. 532.41. Remember, we just went over that daily, got really close to it like this, and then shied away, got sucked up on Thursday. And then Friday's sell, which is this one, came down and smashed it. But look what happened when the first tag happened, right? Super close and still shied it. I mean, it's probably a tag. It's probably not perfect down here, but look at the mix of the two Fibonacci's. And this is what the biggest takeaway is that I missed for the counter trend. High-low fib algo pre-market, and then our weekly. I'm going to take the 2618 from the pre-market algo, and I'm just going to box it with the weekly, right? So 532.41. Once we got close to that, that would have been a buy, right? For a scalp, because not only did we have the 2618 from the pre-market algorithm Fibonacci pointed to the downside, we also had that weekly 532.41 coming in as a massive support first tag, and it didn't even tag it. It might have, but regardless, it magneted back down after. So it caught that 10 SMA daily. You see that blue dash line that's right above the teal, right? 10 SMA daily hits, pops it, and that was the counter trend scalp. This whole zone was the scalp. So if we would have had a golden entry down here, which we did, we just didn't get a good piece of it, right? Pop back up. And even if we just look at a 10, I mean, 1.6, that's 50, 60, 2 points, 62 points back to the 10 SMA 5-minute. And that's also something that we discussed during live trading. I said, we don't even have a 10 SMA tag yet. The 10 SMA in the blue right here, right? And on the 5-minute chart, we have not seen that sucker at all. So once it hit a weekly support that has never been tagged since last week, right? That's the fib. Once it was underneath 538.88, I should have been dead set on it hitting 61.8. So anything under the golden pocket of the pre-market algo down to here would have been the primo short, and you could have had a perfect scalp right here back to that upside. So that's my big takeaway from what I should have, could have did better during that short, which it's not like we were red or anything. We had 17 green, but it should have been 17,000 green, right? on a huge dip like this. So it is what it is on that piece of pie. So back to the technicals here on what we're going to go through for the rest of the video here. I want to give you guys a little intro perspective here on what I think is going to happen coming into the markets as we go down. Okay. Now, to start this off, this is the big video here. We're going to go on the gaps chart. We're going to talk a little bit about the algo system. Now, I can't go into why this algo system is so perfect and yada, 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 but I do want to, I actually forgot one thing. I want to bring over the VIX real quick. So back to the intraday just real fast here before we go into the predictions. In my chat, I told you guys to chart off the piece of the pie right here, the high-low, right? Remember, this is jobs data, Thursday. And we got that algo blip, and I said fib that out on the VIX. So if it holds that 50, which is the golden pocket, right? It's going to go up. Look where it topped out. My magical 666 usage case. So when that started breaking off, we can delete this one so it's a little easier to see. That jobs algo right here pushed up, hit 2618, retraced back right to the 50 fib, launched through the 2618. This time, right to the 423, right to the 666, and finally conked out. So again, you can chart the VIX with algorithms, despite what anybody else tells you. And they do work very well. That was just the last piece to the puzzle I just seen in my notes that I had forgot to go over. Now, the algorithm system that I released to my group, it's in your announcement section, in the journal section. That is the premium algo system, how to find algorithms in the intraday charts. I'm not going to go into it, but we're going to use some of that knowledge here and go to the gaps on the daily. So I got a couple different things to cover here on that first for the prediction of where I think we're going to be headed. So where I think we're going to be headed here and why. We'll cover right here on the start. We're just going to go daily. Okay. So on the daily chart right here, this is that no GP secondary tag on QQQ. So this one had no GP tag. Remember, high low of the daily, right? Comes up, no 1618 from that guy. But the second no tag we talked about right here, right? Remember the 12? We had this guy on Wednesday, which has been historically the strongest day of the week for 2025, pushed into, right, another GP. So we had no GP tags for this guy and this guy. We talked a whole bunch about that. We also have no tag down here. But when you fib out this bottom GP, look where it topped out. 2618 to the penny, right? So again, we could have been watching, and these are the most important candles, is the no GP candles, the candles that create full thrust up, no back test and support, panic to the upside, squeeze, often resulting into all-time high squeezes, like it did, like you see here, from that piece and then in. The bad part about that is when you get different sentiments, like on the MACD, where you have divergence. We are hitting all-time highs while making lower highs on the MACD. That's bearish, right? So where are we going to go, and why did we, pick these two GPs to point to the upside to find the tops? Well, those are simple. It's no G. Why is this thing not? There we go. MacBook hates it. I always got to wiggle the columns on the MacBook, no matter what platform I'm in. Mac hates this stuff. So as we come down to the GP double tag, that's it, the bounce point. So as it says right here, first support bounce, looking for higher rolls before we bounce from here. So the first tag is going to be at where we ended. Okay, the first time that this daily candle's GP had some love was Friday, right? We came from the 2618 and slammed into the golden pocket. So confirmation traders are going to look at that and go, okay, well, two things are going to happen. We are going to extremely follow the bearish divergence we have on the MACD, and it's just going to slice, right? And it could, very well could, or it's going to pop, right? Obviously, it's going to go up and down. Well, we also have sideways. Well, the first tag GP is going to be a catalyst of the over-under. This is what we have to watch. As day traders, we're going to come in, we're going to watch these levels hit like always, because we didn't get a perfect tag of the 50 quite yet on the center of the 12th, right? It's a little bit above it. Now, if we come into that and pop, right, again, and sometimes we can get it back to what? Well, obviously, this giant candle right here needs a GP, right? So we're going to go like this. I'm going to fib this out. And all we're going to do is price level the first hint of golden pocket. And we're going to delete it because we don't want a bunch of messy fibs. So now I know that this orange level at 530.53 is the high-low golden pocket bottom channel of that candle. So the upside, which is a bounce to roll opportunity, would be a hold of the golden pocket here, pushing as high as or close to 530.53, and then looping down to the downside. If that scenario is the one that plays out accordingly, and we don't just get, bought up and whatever happens after that, we'll day trade it. But if that is the key and then it liquids down, where is it going to go and why? Well, back to that little algo system we were talking about. If you watch that video on the private sector that I released for my group, we have some double gap scenarios here that are the most important. And if you know me in gaps, it's the number one thing I look for. Daily, weekly, I don't care what it is. 10-minute, you know me, all to the gaps. Now, gaps that travel in line with each other, right? Those are going to be historic support and resistance. So what do I mean by that? It's a gap that has a gap in the same place, right? That has a gap near the same place. That has a, okay, you get what I mean? Gap right here, double gap right here, gap right here. So I know that entirety of the section, right, is extremely strong support resistance and magnets if they're not filled. What do I mean by magnet? Well, if something runs away from a double gap section, let's say these two gaps, right? And it started running away. We filled the gap. That doesn't matter much. We left this little one right here and this little one right here. But look where the zone tag came back in when we were from all-time highs. We broke up from the double gap zone. It's already filled, right? It's already closed. No big deal. But it magneted back to that zone before it bounced again, right? And this sequence, because of so many gaps in a row, that becomes historic support resistance. That sequence repeats itself multiple times. So a little bit lower here at 494, 492, we have 1, right? 2, 3, 4, right? And if you look, there's a no tag right here. We have not 1, not 2, but 3 gaps that all need to be filled on a triple, right? You see that right there on the daily? So that's going to be a really big what? Target if we continue the drop side. So I don't know if we're ready for the correction yet, but I do have a great idea of where that's going to be, 492.86, right? And I'm 8 to 12%. That's me. 8 to 12% is a decent correction. Well, from all-time high, what are we looking at? Approximately 48 points down, 9.75. That's between 8 and 12. I'm okay with that. Might go a little bit lower. And if we get a very big correction, we also have other zones of interest that could potentially backtest over time. Now, I want to talk a little bit about this area too, that again, I'm just going to do an example and I want you to show you how it came back to the double gap zone. Let's do another example right here. Zoom in real close right here, right? 1 daily gap, 2 daily gap, 3 daily gap. Okay, we have a triple. Notice price action ran away, ballistic all-time highs, 500, big old psychological level hit, womp, to the penny, back to where? The historic support and resistance created by multiple gaps in line with each other. Okay, so that leads me to believe that the scenario that we are in may be chasing down this triple gap scenario right here, quad gap rather, 1, 2, 3, 4, it might be even 5, no, 4. So with that scenario, and of course we got a couple more here too, so don't, there's one back here that fits in line, that could be 5. There's one right behind that could be 6. So even with adding a little bit of range to that box and giving it a little bit more love here, to the low side, you're getting a little under the unfilled gaps, but you do also have gaps in line here into that 492 and some change, okay? So that's why I'm thinking that if this is the correction, we have the correct percent from what I like to see 8 to 12 from the all-time high down, right? It's right in between, got about 10%. If we see a major correct, at some point in time, which I don't believe this is going to happen until 2026. This is my 2026 target still, okay? And I talked a little bit about why. I'll go over that with you guys too. So to finish off, where I think that we're going to get a lead down to, which is, as I just explained, the multiple gap zone. And if we look real close here, we can't just assume we're just going to get perfect panic to the downside. Could we? Well, of course. Anything could happen to the markets. We've had tons of no GPs. So what's our early target and how we're going to walk this down? All right, so my play style for confirmation trading is going to require me to utilize no GP tags. I'm going to do one more candle fib out here. I'm going to use this guy. Why? Well, because there's no golden pocket tag. If we take the high-low of the 3rd, right here, Monday the 3rd, notice 517.10 to 514.79, never tagged. Nothing, right? Goes back up, hits my beloved 2618. Can't stay above it. Flops. What does that come in line with? The all-time high rejection, the body rejection we talked about, the 2618 to the penny rejection from this one, all those things that we talked about. And it's at that 50 fib. Okay. 2 scenarios. Do we have a continuation meltdown candle that goes right through that fib, right? Maybe even gaps that, which would be cool because if it gaps that and never tags the 50 and it leaves an open gap right here, that means when it does hit support, I have a guaranteed back test of where I know to go long and where my target's going to be. Right? So that'd be cool if it gaps it. But what if it doesn't? What if it holds here, does its bounce, and lower high goes down? Well, target 1 is right here, 516. So the golden pocket bounce starting the week into what we just drew as a GP tag, which is this big red candle Friday. We would pop from this candle right here, the 12th center, to the golden pocket lower channel, 530.53, target 516. Why? No GP as we discussed, okay? And now that could lead to, again, maybe another retrace down if we don't do the panic out, right? Oops. And where's that going to lead? Well, as we discussed, we have multi-gap zone open. So let's clean that gap up, look for the exact zone. So I'm going to take all the gaps that are open that I know that have no tags, and I'm just going to make a complete channel out of them, okay? So to zoom in to show you what I did here, right? It's going to be top gap here, lower, that's the biggest one, right? Ranges in with this one and this one. So small, medium, large, goes like this, right? So those gaps with a already filled gap back here, that's going to be our big zone. This is the one. This is where I expect this tumble to the end of February to go, and it might pick up right after February, go right back to bullish, which I'm fine with, but we're going to make this a nice big gold zone, okay? Well, a little better color, that's fine. So this gold zone, right? That's going to be the short target if we continue anything under 530.53. Burn that into your heads, okay? Even if we bounce back up here, chop around here a little bit, the continuation, we are heading sub 500 right here, Okay, we might stop at 500. It might be a couple bounces on the way, right? 500 hits, does this. Nothing goes in a straight line in the market. We start coming back down. 595, 50s. That's it. That's the key. That's the triple gap that is still open, that is never filled. That is one of the biggest historical support resistances we have left open, and it is guaranteed to come back in 2025. Yes, I used the G word, guarantee. 100% chance we will see this close in 2025. Okay, and if we don't, I'd be very surprised. Then I'd be wrong. And I just don't see it. I guarantee that's going to fill. Now, 2026 further projections, I told you guys I'd touch on for the last little bit. There's not too much I covered, or I haven't covered since last video, right? There's not too much. We covered all the big stuff. Recessionary zones like the 2026 failure is going to be pretty large due to the, again, multi-gap systems that we have used. And we're going to go into a couple little key factors here on why the 2026 kicking the can down the road could return to the recession zone. I call this recession. We're not going to go into a full recession yet. I don't know that until 2026 would go on, so on forth, right? That would be nuts, but we can't call that far out. So what are we going to call? Well, I'm going to call it the recession zone only because it has just a massive grouping of gaps. And as we just discussed, for that mini lesson, rewind if you need a little bit more time, or rewatch. I'm not going to spend more time on it. We're going to go with inline gaps. Boom, right? Boom, 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 right? Boom, and still open at 336. This is the target for 2026 still. If you didn't see my last video on why I think we're going down in 2026 in sentiment, well, watch it. Because I think 2025 is still going to come down to here, guaranteed. Even here, potentially, volatility back up. It's going to do this. That's it. This is going to be 2025. Take a picture. This is what 2025 is going to look like. This is what 2026 is going to look like. Mark my words. 380, 370. Okay? That's what I feel could happen from 2026 on to 2028, 2029. Okay? And then we'll talk about that when it gets there. So, a couple key factors here. I do have some good little stuff. We have Elliott Wave. A little bit of data here from the number one. A lot of these guys on Twitter too will post, or X or whatever. Ryan Dietrich, Carson Trades. There's a lot of good guys here who post a lot of this good stuff daily. You can see who I follow on there. I'll shout them out here at the end of the vid. Or if you have any questions about it, start typing them up because we're almost done with a half hour here. So what are we looking at here? Well, combined trailing PE, forward PE, CAPES, BPs, yada, yada, yada. Obviously, overvaluation. So the last time we had some of the highest overvaluations, well, unless you lived under a rock, you know exactly what happened. Depressions and huge corrections, right? Not even a correction. Depressions. Those are massive years that are historical in the stock market, right? Well, I don't like that we're getting real close to that as we near into the 2026 potential bubble snap, right? And it's not to say we're never going to come back. Again, watch my last live video. We cover periods of when to make money and when the next big market bottom is going to be coming, so on and so forth. That's what I want to stick to. Now, as I said earlier, see this one too. Ryan Dietrich here on X posts a lot of really good stuff. Give him a follow over there. Ugly start and finishes to the week. So as we go into the day trades, I want to mark this up for you guys. This is 2025. And you hear me on stream all the time. I take a break on Mondays because it's real slow and Fridays because I just don't like the action because usually it's snaky and downsided. I am the most aggressive because I'm a long bias trader more than a short bias trader. I'm way better at longs and counter trending longs. Tuesday, Wednesday, Thursday, I'm much more aggressive. Well, how does this knowledge play into the weeks coming? Well, it's obviously just that. As we go into some of the other big pieces of the pie here, oh, we had two of these up. Oh, we're on SPY. All right, zoom this down here. As we go into some of the bigger pieces of the pie, what do we expect? Well, I'm going to give you one more little thinkorswim view so we can see the moving averages, and I'm going to talk about why I think the 2025 correction is coming down here, and maybe this might be it, guys. This might be it right here. So pay attention for why, and this is the key point to the whole video, and what I figured out recently here is that if we continue under moving averages, we do need a tag. And you know me about first tags and shying, and I really like to when things come back to tag. Well, we have now hit a higher high. What do we know about the scam of the market? Once we hit a higher high and it reverses, well, generally we break every single high or low as we come back in. We flat top, and we know it's extra bearish because it's coming from an all-time high and creating a big candle like this. Last time that happened on the Powell dump, what happened? We knee-jerk to lower high to lower. What did I just say we expected? Potential up to the half candle, knee-jerk correction down. But why do I expect it to go all the way down here? You see those little neon purple lines down here? 200 SMA, 200 EMA. If we go back historically now, and I didn't even notice this until I had to take some notes here. Two things. I'm huge. Jesus. I got to hold on. I got to wiggle the column because my MacBook won't. There we go. My MacBook won't be useful on TOS unless I wiggle the column. All right. Huge on gaps. Weekly gap not filled, 42.72. This has been in our radar forever, right? Obviously, weekly gap. There's no GP tags down here. This is recessionary, okay? Nothing I want to see anytime soon besides after 26, 27, and 28. That's that target. I'm not worried about that, so take that out of your mind. The 2025 bounce, right? Now take a peek at this. Why is it not? There we go. Now remember, the fuchsia, neon pink lines, EMA, SMA, 200s. Everybody's favorite, right? 200s. When the last time the Trumpster took over, 2016, same scenario played out in the algos, and I was staring at this forever trying to figure out some new stuff, right? Like always. 16, 17, 18, 19, 20 when he lost office. But what happened in the sentiment, and again, I watched my last couple of YouTube video lives, and it teaches you presidential sentiment and why this is important. When 2016 came, what's the price action? Here's 2016. What did it do with those 200s? Because right now, this is 2025 right now, okay? This is 2026. Okay, this is the repeat. Look what happened. Notice something? Here's the start. Here's the end. That's all the price action. Do you see any hits of the 200 moving average? Nope, you do not. But the next year, 2017, oops, scooch on over. Price action magneted right to the 200. So I started backtesting this, and I'm like, I wonder if that's a pattern, right? I wonder if that's a pattern, and it is. Every year that we see a no tag 200 SMA or EMA, the following year from that no tag will get hit. Here's another example. 2012, no 200 tag, no 200 tag. The next year, 13, 200 tag. If we get a no 200 SMA EMA tag, the next year, lead always comes into it. And I just noticed this. Now, fast forward to where we're at right now. Presidential election, the redo. What happened? Pandemic is not to be confused with, but let's say same thing. 2020, no 200 tag. That's the first presidential elect year. Womp, right? To the 200s and under. Where are we at right now? 2025. I'm sorry, 4 just ended. We're in 2025. What happened in 2024? No 200 tags. So this year, 2025, we are set up to come down to the 200 SMA EMA. So if you backtrack the sentiment presidential elect years that we did videos on and travel that back to the 200 moving averages, we get a no tag. I didn't even know that existed. We just found that out. So that's pretty fun. Now, that's going to help us with where we're going for the bottom of 2025. Now, the correction, as we just stated, it could start right now and as low as those 200s. The end of February into March, it could be after Q1. What's the catalyst to continue from here on? Right? What's the catalyst? What do we have huge that's coming up? I'll give you one hint. Berkshire Hathaway is on the most cash, Mr. Warren Buffett, that he's seen since like the Great Depression. 380 billion, something like that. He's like over triple what he's usually at of cash coming into 2026, right? What else? We have something huge coming up this week. Anybody care to take a little guess? Yeah, now that we figured out simulation will change it for sure. Nvidia ER, thank you. That is 100% correct. That is the biggest NPCE, yep. But Nvidia earnings, this entire market is fabricated off what? What have we been hyped off after the quantitative easing? AI. What did we see the market react to devastatingly on that last poll? DeepSeek, right? And what could unmantle and shake the market into a volatile mess of 2025? The loss of a good ER from Nvidia. So that is going to be my catalyst watch this week coming into Wednesday. That'll be the after hours. And if the catalyst hits of Nvidia, take in a big old nothing sandwich on their earnings. I want to see that golden pocket fail here on that daily or wipe out through. Because if it wipes out through, it's no, we're going right down. So let's take a percent from all-time highs to the 200s, 7 something, right? I think that's it. And it's a little different from SPY to QQQ because SPY is 500 stocks, QQQ 100, and we're going to get a little less. So all-time high, let me try that one more time. There we go. 7.5%. What did I say? 8 to 12 is my number for correction. So that puts us in what? An absolute perfect scenario to catch 8 to 12%, which I assume it will slip through a little bit of those 200s to scare everybody. Well, why is that? Well, we got some pretty cute gaps down here still, right? 559.36, excuse me, and 535.65. Where are those gaps? Well, right here. Right here. And what are the percentage that those gaps are away from all-time high right now? 8.82 and 12.7. Weird. I just said 8 to 12. That's 8 to 12. I don't know, man. I'm just here. I just show up. So 8 to 12 is both 8 to 12. So the February pressure is the February pressure because the sentiment of the end of February, generally speaking, the last 2 weeks, which we ended the second week at a big old red candle, and the next week here is generally bearish. So if the likelihood of getting the pop is a little lower, okay, I might say, depending on what the futures look like at 5 p.m. tonight, about 4 hours, if we gap through that 50 SMA, that means the futures go after hours like 5 p.m. That's what causes the gaps on SPY and QQQ. If you're not a futures trader, futures open at 5 p.m. Central. And if the futures run down, SPY opens up in the gap down, right? Or QQQ or whatever ETF you're trading, SPX. And if that happens, we'll gap under the 50 and we will continue. If the futures hold tight to that 50, now let's go to the futures quick. Ugh. And Q and ES. I'm going to give you the play-by-play here that we're going to hopefully see. How are we not over here yet? There we go. Here's a couple interesting takeaways now for the open. We are on the 50 SMA because, of course, futures and the tickers, the ETFs, are going to be a little different. What are a couple things we see here right away? 100 EMA, broke, never retested. 200 broke, never retested. 666 actually got a retest. So the 200, the 100 are the moving averages that we could retrace to. Well, look how close they are. This is our first tag of resistance right here. So when 5 p.m. opens, we have a gap right here, 21,670.96. There is a high percentile chance we'll open pretty much right here, right? Or maybe even a little bit up into resistance. If we open down, I'm guaranteed buying it up to the gap. And I'm going to try to get the 100 EMA and 200. If we open up low, start to build these candles under yesterday's lows, I assume we're going to come back up, let those moving averages chase back in as rolling resistance down, okay? This gap is going to play a huge part at 21,670 of direction. Now, if ES, which again, the end of the day here, I want you guys to start doing this too, continues, you're going to check both charts now on futures. Not so much MNQ, but the ES and MES. If I look here on ES 1 minute chart and I just seen an NQ gap, I'm like, okay, well, let me check ES. Because if there's a paired gap, which means there's a gap not only on NQ, but ES, it's stronger. Well, ES doesn't have one, but what do we have here? MES certainly does. So we have another grouping here of multiple gaps on the 1 minute for potentials that are going to be closing, right? And what does that mean for our friend here, the 200? We got a little test there. Qs is always the worst trader. SPY's the better one. So if we get those moving averages slammed on in us, again, remember, we hit the 50 already here on the futures, and we popped it a little bit and then washed it. So if we stay under that 50 indefinitely, under pretty much 60, 50, I'll call it, it's downside. It's going to continue the sell, and we're going to end up near that 100 EMA and 594450. That is a prior algo 1 minute gap that's still left open. Okay, might be even farther back than that. There we go. Use a 30-30. You're not gonna be able to see the gap, but this little guy, which I have marked off, is a little demon. So I think if the continuation wash is, we're going 5944.51. So from the 50 SMA's loss and under 60.50, the call is going to be down to here, 106.75 coming into next week, 1.76%. 5948, pretty much 5950, because half whole psychological numbers, right? Correct, Wednesday, yep. Did I say a different day? I thought I said Wednesday. I might have said something wrong. But correct. So that is going to be that call. So in the beginning of the week, Monday, Tuesday, when we day trade these futures, we'll be primarily looking for these gaps to fill. So it might open, again, real close to the MES gaps, might be under, might be over. I don't care what way it goes. If we open above it, I'm going to look for continued up, right? Because this is what we do every single setup. And I'll go through the day trade setup here real quick. If you have any questions, we're pretty much at the end. So please post them up and I'll go through. All right. So, and the close is the biggest over under that we're going to use. So here's the close, right? Right there. Right there, 60.29, 67. If we open and we are inside the close and it holds, we have a chance to 61 or 60, 69.56, as we discussed on the SPY, up to the GP, down potential. Up to the high GP, down potential. Still there, right? Until we see a day or two close above, and maybe, right, because Nvidia is going to be the catalyst. Maybe Monday holds, fills the gaps up. Tuesday pushes into the golden pocket, and then we close here on Tuesday. And Wednesday ER comes at the end of Wednesday, and we start the day, and it's just doing this nonsense. And then the ER comes, and then we have not only perfected the golden pocket tag for resistance right here, we start heading down all because of the catalyst Nvidia. Then we will start targeting the downside. Last but not least, we do have a contract gap to worry about on the daily. These aren't as pure as some, but you generally don't leave these open. So again, this is my final target for you guys on the MES, on the ES, on the Futies. Down here, and lo and behold, the last big WTF of the video. Look where that lands from this golden pocket of Friday's candle, directly on the close of 423.6, closing the gap to the penny, 5642.63. That is the long-term goal. Short anything under trend of 6,000. 80.39 is going here. Okay. We'll even take a fun picture to save this one from the live, because this is going to be hopefully the corrective territory that we see down to the gap. And just for references to come back test some of our data that we see and what we want to see, we'll be at. So any questions here? Thanks for tuning in. I'll try to go over them. Does TOS have a magnet tool? I don't know what a magnet tool is. So I'm not sure if it does or not. I only use Thinkorswim because it has the best data. I'm not sure what a magnet tool does. If that's something on TradingView. I don't use TradingView because they have incorrect data. The moving averages will always be off of Thinkorswim. Doesn't matter if you do high, low, open, close end day. You can do all the adjustments you want. They'll never be what Thinkorswim is. So I will never use TradingView because it is the incorrect data. I will use Anchor View apps. And again, it doesn't matter what. You can buy the data on TradingView if you want. It's free on TOS. You can get very close, but those moving averages will still kind of come apart on the futures too. They're just a little bit off, and I'm just not a fan. Because I have the live data in all of our Top Step X accounts. We have the live moving averages on there. They just don't work. They're completely off. So I will not use that. Need to play around with that. It snaps the specific points of candles. Oh, no, I'm not sure on that one. It might have something like that. I would have to, like an automatic snapping tool. I'm not sure. It's an old dinosaur. It might not have something like that. No question, but you were right. TOS is superior to TradingView. Yeah, I just had to see it to believe it. Yep. So and that's one of those things. It's if you download TradingView, download TOS, go to your moving averages. They'll both kind of hit too, which is annoying, right? If you have 100 EMA 1 minute on TradingView and 100 EMA 1 minute on TOS will hit first generally, and then it'll come up, mess around, and then go down, and then TradingView is 100. But as a first tag user, and my strategies rely on the first time 100 EMA is hit, I need to use the faster one. I need to know what TOS is coming into that hit and continuing, not TradingView's second, which they both work ish, but TOS works way more, plain and simple, hands down. Can you point me to the video on how to find algos? If you're talking about the hidden video, Terry, yep. For us, just go to the Elite's announcements where I announce every single video. Scroll up a smidge, and it's on 11/2 of 2020. No, I lied. That's wrong. That's wrong. A little higher, a little higher, a little higher. Oh, no, that was right. Because I didn't make any... Just look for the letters that are not... There it is right there. 6/2. Right here. It's the hidden gap system that we released to you guys. 6/2 of 2025 inside Elite Announcements channel in your Discord. I think I have it pinned in the journal section. Let me take a check. That is also pinned in the journal section. Go to your journal, news, and technical breakdown section under the elites members. Hit the pin in the top right-hand corner, and the hidden algo system is right there for my members. Yep. No problem, my friend. I look at AAII at the beginning of the week. I will keep it as a general. We did do a little video on that on the lives. I don't mind AAII, and sometimes AI is you obviously do the opposite of retail trend. AAII will come up, and you'll get a sentiment survey of what people think. And obviously, like if you're looking at AI like this, and it's a thing I'll check for the weekly. It's in our news report every morning, or the start of the week and morning. We'll report the AI sentiment, all the news for the recaps coming up, all the ERs, all pretty much the data points for the entire week, Monday through Friday. We post every single one because we have the Trade Exchange News, which we use, Boiler Trading. But they do post the AI in there. And this last week is going to be a little bit messed up because you can't just be, I've never seen this, to be honest, triple 40+%. That's pretty crazy because eventually they were right? Because AI, you usually want to go to the opposite. So if you're looking here, right, a lot of the times, and this is 6 months, remember, this is not the week of, but if we were looking at the week of, I like the historical view versus week ending. So week ending versus historical. Make sure to just stick to the week, just the week. Don't go into the long term, next 6 months. Like, what are we looking? No, don't even bother with that. Just look at the week of. Now, we have a little video on live to discuss this and why the 33.33% very heavily weighted. You need to watch that 33%, how far you get away from each one, because obviously divided by the 3, it's through 3.3, through 3.3, split between 3, 100% split between 3. So if you come into the sentiment like, last week's and it's all bearish, and you noticed it's squeezed until the last second, okay? The last second. And remember, these are the technicals played out more than the sentiment played out, because what do we know about the sentiment in February? Everybody knows if you look at a sentiment chart or a trade chart, the ending week of, or the ending month of February is generally bearish. So if you went to a historic chart, you went max weekly, and every time you went back to wherever you wanted to see, whatever, which we can't do that here. We can do it on like XPX. Every single time you'll come into the year's February, the back end week would generally, more often than not, of course, nothing is 100% in the market. If there was 100% trade, we would all just all in every account every time and just wait for it every 4 years, 3 years, whatever it happened to be. No such thing, right? But yeah, the sentiment general is you go to that February, right? Okay, TOS. I love you, but you're kind of a pile sometimes. Here's 2019 pandemic, right? That's a kind of a no-show. Can't really call that one. Next one at 2020 goes all the way in. We got January. This might be one that worked and didn't work. Here's February. Look at the red candles. Boom, stacked up at the end of February. Drawing tool, Jesus. And TOS auto adjust. Gotta love the old dinosaurs. But there was red candles right there. You can look at it on the uptrends as well. The last couple of years after the dot-com bubble, every single time you come in here, right here, February, last 2 weeks, bam, bearish cluster candles right there. Next year right here, February, boom, right after. That one happened a little later. February, end 27, boom, the last 2 weeks, both red candles. The sentiment is generally bearish. Now, the high volatility and at all-time highs, we are going to have bigger knee-jerk reactions because of that February sentiment, because we're obviously at all-time highs. And we just started, what? The first red week we've seen in over a month. What does that tell you? Next week should be red. That's what it tells you. And we're obviously gonna look at SPX here too, but this is a no shy. I didn't go over SPX's no shy. Did I? I think I did on SPY, but just to recap real fast, guys, pay attention to this weekly, 113, January 13th. We called this too on the last stream that we did for our group, but remember this. Not an actual tag. 5923. So go to the daily chart. Huge over under right here. As soon as we drop inside here, boom. As soon as we drop inside that zone, we just did a weekly, so these are always teal for us. Like that. So once we're under 60, 15, 76, right to the GP, right to the 100 EMA, right to this big old gap on SPX. Everything's pointing to 5,900 right now. The second we open up under this, and I'm thinking we're going to get the continuation. We're going to see futures open in a few hours. So, yep, no problem. Yeah, there's a few decent ones out there. No problem, Terry. Yeah, I appreciate the likes and all the stuff. I don't really I'm not a big social media YouTuber. I'm the anti-influencer, so don't worry about likes, shares, and comments. If you guys are here and coming up this week, we're going to start giving away some Top Step accounts because I'm not sponsored by Top Step. I'm not promoted by them. I'm not commissioned by them, but I do really enjoy their platform and what they do and how they treat traders and how the flexibility of actually being a day trader you are allowed to be at that platform. So I'm going to be giving away some Top Step accounts. Look for the next videos. It's going to be Monday, Tuesday, Wednesday, Thursday. We'll give away some by the end of the week. And if you comment, like, and make sure you're subscribed, I will use a YouTube algorithm, little comment picker, like picker. It'll make sure you're commented, liked, and subscribed. And I'm just going to start giving away Top Step accounts to my subscribers that comment and like. So if you guys are interested in getting a couple extra chances at Top Step for 50 bones a piece, so we're going to give away some 50Kers. So tune in for that. I'm proud, my friend. How can you know when the chop is coming? Is there a way to know? I lost all of the profit I made on Friday in MNQ in the chop at the end. I usually trade off of moving averages and the 2-minute. Okay. Well, unfortunately, there's obviously the saying, the market is always going to do what the market wants. So if you were trading MNQ here and you were saying you got chopped up at end of day, I'm assuming you mean this little, horizontal play here. What I like to do is remember psychological sentiment. So I'll give you a couple key points for at least Friday. The psychological sentiment for me, Mondays and Fridays are the two worst trade days, okay? Friday is very, very known for horrible follow-through, right? Until you get, obviously, a big old nasty one, right? Like this. The horrible follow-through can persist into choppy kind of scams. NQ, right off the bat, psychologically is a worse trader than SPY. Okay, period. If you got chopped up and lost profit here, you were trying to scalp. Here's a big psychological sentiment takeaway that we have already moved down from the top of the day, right? And I think we lost, what, 600, just about 550. So we lost about 550 points, maybe from a high day. It was like 6 or something I was looking at here. Yeah, 595. So after a move like this, what were you trading, Louis? Because when you come all the way back down right here, all the way down, and you've already implemented a move, you already have this whole downside move, and you can't predict chop because the market is going to do what the market wants regardless. There's no, nothing. The only way I can predict chop is pre-data. If it's before the FOMC or before CPI, I know the day coming up. So let's say we have Wednesday FOMC. Tuesday night into Wednesday morning, that piece of trade is horrible. That piece of trade from that Tuesday night into Wednesday morning is horrible because it is on pause. Follow through trading where price action is going to do what it should do will not follow through because it is waiting for FOMC. Same thing for CPI. The day before CPI is not going to be a good trade day. The day before the weekend on a Friday is not going to be a good trade day. So what did you long or short here? Because we already had the move down. And if you were looking for the retrace, we were guaranteed too weak because the algos, and this is for just my group right here, we follow something called controlled buying and controlled selling, right? And two things, which I started with the video with today, we talked about shying the moving averages. When something shies like that all the way back down and it still didn't hit that 100, don't look for bounces. Don't look for follow-throughs because at the end of the day, you did what? Well, you already flew 500 points or 600 points to the downside. What did you hit at the end of the day? This is the 50 SMA daily. The chance of it going through there is very limited, and the weakness of the day showed you all day that it had zero interest in bouncing. When you see a chart leading into the end of the day like this, never plan for a bounce. Never plan for a retrace. That's a dead day. That is a complete red wash day. It is in a controlled algorithm sell. Hidden gaps noise. Yep. We'll get there. We'll get there. We'll be hype. Yeah, I'm just not the influencer type. Yeah, for sure. I don't care about this. I'm not trying to make money off YouTube. Don't buy my course. I don't sell one. But if you want to come learn how to actually trade, we'll show you. But I don't know if you're still here, Mr. Louis, but I don't see any more of the comments. But yeah, the big takeaway is you can't play for chop. You can't plan for chop, but the psychological catalyst and what the day, God damn it, mouse, what the day is giving you, it does give you some hints throughout the day. It shows you like this whole price action, that is not a bounce day. I got caught in a couple of these. I got 130 reds on MNQs on the way down because I was looking for bounces on first tags, and that was earlier in the day. Then I stopped. Why? Because I was like, oh, this is an algo sell. This is something that's going to be shying the 100 EMA, never retesting VWAP, never getting a follow-through bounce. The algos are in control. They hold the price action to where it needs to be. They don't allow it to backtrack. That's why at the open, those 100 EMAs and 200 SMAs that need tags are all going to be in play. So you know right away if you open down, right? like under yesterday's low, something like that, you could get a move initial knee jerk down, and then it'll come back to those moving averages, and it's either going to go one way or the other, right? And it's all going to be dependent on yesterday's close, which obviously Friday's the close. We're right at the 50. Are we going to bounce right at the 50, or are we finally going to walk it straight through? And with the divergence that we've been seeing in the MAC of the RSI with higher and higher and higher, right? Qs hit all-time high, SPY hit all-time high, futures, and a little different like always, but we are still seeing that divergence. Generally, in my opinion, it's coming down. And the same thing applies to those futies, man. If you go to that max daily chart and you look back and you're looking for those 200 tags, last time it hit was the bounce we called here, the bottom of the market. And then last year, no tags. So if the futures are coming down on this contract, you get 111, 7%, 7.07%, $1,431. And we could get a straight liner here. There's definitely possibilities. We are sitting on a lot of fear. And this would have told you that, the volatility index, right? And we're only at 20. If you go look at the daily chart, the speed of the VIX and where this thing could potentially go, you know, look at my big label over here. Large gap, top open, 21.45. We hit this already, but with this candle that came back. But we had some gaps left open for a while. We could push past those. And I'm looking at GP tags that were, you know, way over here. And especially GP tags, which means a golden pocket tag. This big VIX candle, if it continues, well, look to your left. This guy is going to be a monster right here. The VIX has room to 1980 to 20, and I think even higher if we see that weakness through the 50 SMA on the daily. So, yeah, we can't chase shorts either, King Louis. We can't do that. We can't short. So if you were trading at the end of the day short after a day like that, just leave it alone. It's always a next trade day, man. Always another day. Didn't realize 50 SMA was there on the daily. Yeah, unfortunately, that's a big support that rolled in, man. Yep, always bounce back in the market. Just give the market what it wants. Just get out of the way. It's like a freight train, man. We can't battle the market and win, I promise. We're at the mercy of the market. We're trying to get the coattails. Let me check my notes real quick. That's pretty much it. I'm going to go over for my group. I'm going to go over the Google, Amazon, Netflix, and Tesla double gaps. We didn't have enough time today, but we're going to go over those on Monday. Berkshire Hathaway, all the node tags, weekly GP tags, shy 590. Yep, we covered all this stuff. All the double gap zones that I want to see fill, all the predictions. All right, my friends, I appreciate you guys for tuning in on the Sunday. Sorry we didn't get the videos out a little bit earlier here. We got a lot going on to the houses, but we're back to the normal videos like always tomorrow. So I will see all of my team Monday morning right away. And if I do have time, we're going to do some little extra videos this week. Actually, I know I have time. So we're going to get the extra videos up that we needed to get up this week. So we're going to do the prediction videos on our astrology, numerology, swing trades coming into the bear markets, and that'll probably be it. So you guys take care. Have a good rest of the weekend. Enjoy the Sunday. Try not to get too crazy about the market, but watch the futures open. Watch how we react at this 50 SMA. It's going to be everything over under, okay? And that'll be that. Watch that divergence on those oscillation indicators, and more importantly, and always more importantly, guys, just stay curious, stay fun in the market, and always have a good time. Trade safe. Thanks for tuning in, guys. We'll see you next time.